Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our stock market weekly recap for February 24th through the 28th, 2020. We're going to go ahead and cover the four main indexes, look at stock futures, jump in, look at the S&P 500 as a whole, what stocks were up, what stocks were down in this week. Then we're going to take a look at oil, the dollar, silver, gold, bonds, mortgage rates, and then from that point, we're going to be jumping over into the M1 Finance account, taking a look at the performance here for this week. How has the portfolio done overall? What stocks were up? What stocks were down? And we're also going to go ahead and cover what dividends were paid out this month in February and what is my thought process from here Friday going forward. What am I doing currently as far as my finances and as far as my portfolios go? So with that said, if you are brand new to my channel, I would really appreciate it if you do hit that subscribe button below. If you do enjoy this video, find it helpful, entertaining, and just enjoyable to watch, hit that thumbs up button below. If you have any comments or questions going over the stock market, dividends, just anything in general, let me know your thoughts down below. How are you feeling right now during this process? Are you excited? Are you a little bit scared? Are you brand new to investing, or have you been investing for a few years? Let me know in the comment section below, just your ideas down there. And with that said, let's go ahead and get into the video. So what I want to show right now really quickly here is over on M1 Finance. These are the markets. Now, these are not exactly the indexes, but I want to showcase these really quickly before we take a look at the indexes because I want to show you the differences in them. SPY, which tracks the S&P 500 index, or another one is VU, is down 0.47%. The Dow Jones tracker, DIA, is down 1.06%, and the NASDAQ QQQ is down 0.49% here on Friday. Now, 0.47 for the S&P 500. If we jump and take a look at the S&P 500 index, it is down 0.82% here on Friday. And over the past 5 days, it has lost 11.49%. But it would have been actually a little bit less had it, if it wasn't for that spike here towards the end of the day. There was a lot of volume here towards the end of the day. You can see the volume would get really built up down to the last second of trading, and it could have closed, well, I believe it was down around 12% for the 5 days, but ended about 11.5%. Year to date, we are now negative 8.56%. But you can see here there's a bit of a change, difference here from the SPY of 0.47 and the S&P 500. So kind of interesting how you are invested in different ETFs that track the index, but they're not exactly always in sync. So there is that. And of course, what caused the market to fall? Well, I cannot say it out loud because my videos have been getting limited ads and demonetized. So if we just read the headlines here, if you would like to just stop the video and take a look at the headlines, you can kind of see what is kind of going out there, what is, who's going to be speaking. I believe the Fed's coming out Sunday and discussing here. So the Dow Jones lost 12% in a single week, thousands of points lost per day over multiple days. So very interesting out here in the market. The Dow Jones here lost 1.39% here on Friday. M1 has it at 1.06 with ticker symbol DIA. Over the past 5 days, it's also down about 12.36%. So big chunk down there, hit harder than the S&P, but you can see big volumes here coming in on Friday towards the end of the day, just kind of buying it up. I don't know if that was the Fed maybe coming in or investors jumping in here, but it was trading below 2,500 and it got bought up to about 25,409. So very interesting how, I believe last week it was at 3,100. See, I have it on my spreadsheet, but this is from a couple weeks ago. 2 weeks ago it was at 29,398.08. So I didn't track it last week. I forgot to write down all my indexes, but it has lost quite a bit because Thursday and Friday last week were negative, and I think the overall week last week was negative. So overall, year to date, the Dow Jones is down 10.96%, putting it into correction territory for the S&P, the Dow Jones, and the NASDAQ because they've lost over 10% very, very quickly here. NASDAQ here down 10.54% in a week. We can see the index on Friday closed up 0.01%, and again, the differences here, QQQ is at 0.49%, so again, a little bit of a discrepancy there, but overall, we can see that the NASDAQ is actually performing the best of the three main indexes, only down year to date 4.52%. So I do see a bit of a pullback. We've seen a recovery here towards the end of the day Friday on all the indexes here. So it's very interesting. The Russell 2000 down 12.04% this week, and year to date it is down it's in third place right now, down 11.51%. So Dow Jones. Oh no, it's in last place. Okay. So Russell 2000's in last place, followed up behind by the Dow Jones, then the S&P 500 down 8.56 and the Nasdaq down 4.52%. Now, looking at stock futures. Now again, this is Friday right now when I'm recording this video. It's 11:15 Pacific time over here, and stock futures are currently positive. This is just a run up from, we saw the market ending and moving towards, possibly recovering here towards the end of the day. So we can see some of the futures are just positive, but this can change through Saturday and Saturday and Sunday as other news comes out. The Fed, I believe, discusses, what's going on in the market here on Sunday, and as we get closer to opening bell on Monday, that's when futures are going to be able to kind of show, is the market going to be starting green or is it going to be starting red? I do think and expect the market to continue a little bit of volatility, as there is, everything that's kind of going on is just now hitting the United States. And while I think we do have slightly better living conditions and ways of not getting sick, medicines available to us on the ready, I know a lot of articles are out there talking about you'll be hit just as a standard cold or flu. You'll have some of the similar symptoms. You can take ibuprofen, just rest. And, it should only affect you mildly depending on your health. So we'll see how this kind of plays out in the future, but it's unpredictable. It's the unknown which is causing all this market volatility. The market does not like the unknown. We don't know how much these companies are going to be affected by this, the loss of production, the loss of sales, the loss of their services, having to cut back. This is all unknown in the upcoming quarters, how much their earnings per share, their revenue, their net income will be affected. That is why we are having all of this volatility right now. So with that said, let's go ahead and take a look at the S&P 500 heat map. What stocks were up, what stocks were down here on Friday. So technology, anything where you wouldn't have to leave your house to take advantage of, is pretty positive here on Friday. Google, we obviously use the browsers. You don't have to go anywhere to use it. Google's up 1.85. Facebook, you're browsing, talking with your friends, getting hit with those ads, up 1.43. Microsoft, they said they were going to be not having as good of sales here due to the outbreak, but it's still positive, 2.42% here on Friday. I don't know how this would be really affecting them. They do a lot of licensing from third parties, and it's all, you buy the software, you download it online, or you download it in a store, and you just get it on your computer. So I don't know how they'll be affected too much, but we can also see some of the communication companies here. Qualcomm, the video, semiconductors here, pretty positive. Down credit card services, both Visa and MasterCard, up here on Friday. Honeywell and General Electric, kind of interesting to see some of the industrial goods be positive. I was expecting 3M to be positive here on Friday. I know a lot of my coworkers were discussing 3M today due to the masks that they're planning on purchasing or looking into, and they were also talking about 3M stock, looking at potentially buying. A lot of my coworkers are interested in stocks. Some of them own Bitcoin, some of them own stocks and such. So a lot of them use different products such as Robinhood and M1 Finance and Webull, which are actually down in the description below. But it's kind of interesting that a lot of them actually do that. So looking at the 1 week performance, what is out there? Wow, that is very red. That may be one of the brightest red screens that I've ever stared at. And as you can tell, there's only 1 or 2 positions out there that are showing a hint of green. Here, if I move my mouse over here, we can see that this company here, QRVO, it looks like maybe it's Quarvo, is up 2.43%. I'm not familiar with this company. I've never heard of it, so it's very interesting. It's out there priced at $100.58 and is up 2.43% here on the week. If we move over to the biotech, we can see here that there is ticker symbol REGN. This is Regeneron Pharmaceuticals. Looks like it is positive for the week, 10.27%. So I saw that Gilead Science And also, this was another one. I'm not too familiar with this one. I followed Gilead Sciences in the past, but they were pretty positive. I think they are one of the ones kind of leading the way, looking for a potential, not an antidote, what a vaccine for the coronavirus. But overall, across the indexes, it is all negative, and that is actually kind of nice to see because if you're an investor and you're investing in single stocks or even ETFs, or you're trying your hand at buying some of these Apple, Microsoft, Google, and they are tanking in your portfolio, it should be welcoming to know that it's not just your holdings that you have selected individually, but it is everyone's holdings as a whole that are down for the week. So, regardless of what positions you probably hold within your portfolio, they are going to be down and negative for the week. So, I'm going to go ahead. I just had to go over here and refresh this page. That way I'm not logged out of M1 Finance. So with that said, I'm not going to spend too much time here. You can kind of stop, pause the video. This is finviz.com. This is the heat map, and it just kind of shows each sector. So not one sector was heavily affected more than the other. Every sector was down anywhere from almost 10% to the financials are down roughly 15, almost 20% there with PNC, and across the board there. So oil down a continued 15.32%. I really don't know where oil is going to stop bleeding. You know, we thought we had some support here, double bottom, but it looked like it was showing signs of recovery, and then it just deteriorated with what's kind of been going on here in the market. Just a quick dip, and it's been trending here ever since. It does look like it's building up some support down at these bottoms, but look at this, $9.45 for USO. That is crazy. I don't think I've ever seen this low. So over the past 5 years, we can see huge volumes as it gets down into this area. The volumes down here actually exceed where they're getting bought up right now. So just interesting. The dollar, we saw the dollar was around 99 and some change the last few weeks. So right here, Monday, just kind of trended lower, lower, lower. It's now at 98.13. I'm not sure what's kind of playing a part there. The Fed, I know, has been pushing a lot of money into the financials, into debt, day after day. If you look at their balance sheet, it's just increasing there. Moving on to silver. So a lot of investors are looking for safe havens, silver, gold, bonds to move their investments to. So they're trying to hedge their companies, their stock, their individual companies and such, and they're buying either silver or gold. I don't know if I talked about this in my past video, but silver and gold were already trading near pretty record highs here in the short term. So I felt like even if they are normally considered hedges for your portfolio, they have just had such a run up in the last few months that at $17.50, there wasn't a whole lot more room to grow. You can see here, even at $18, that's pretty high. If we look at the 5 years, there was a time back in early maybe 2016, 2017, where it was around $19, but that's only a $2 difference. There's much more room for it to fall, especially right now where we are currently at. It could fall even down into the $14 point. So another $1.50 kind of shaving off this. So over the past 5 days, it is down 10.13%. Year to date now negative 6.89%. And if you're thinking gold's going to help you any better, we can see gold here down for the past 5 days, 4.09%. It is still positive for the year, up 3.83. But I don't think gold or silver are really good hedges in your portfolio to keep kind of just cash on the side. When your stocks are going down, you may see silver and gold go up. That's not the case here. If you're holding gold and silver and stocks, they're all going to be going negative here. So year to date, yeah, we already kind of covered that, all positive. Now, my recommendation is if you're just trying to kind of not have your capital invested in or just kind of left in cash, it could be worth moving into bonds. I know a lot of investors look at MINT, which is just kind of a dollar for dollar sort of very close to almost like just liquid cash or an ETF there. It's mint. It's just like a dollar for dollar, and it just earns a yield, and it just kind of sticks to that. So you're still making some sort of an interest on your capital. It's not just sitting in your account not doing anything for you. But I think BND actually does a little bit better job here. You can see some growth here over the past 5 days, up 1.12%. bonds are now up for the year, 3.46%. Now, I did own a good chunk of bonds, almost $11,000 of bonds on one of my accounts. And on Wednesday, I moved it from bonds over into the S&P 500. They're only down a little bit. I think I lost about $600 of equity by switching it over from bonds into the S&P 500, but just not having it in bonds anymore. I don't really need a whole lot of bonds. I just kind of moved it into bonds early in the year, and I kind of forgot about it up until recently. And just because of this dip, putting the S&P 500 into the negative, just basically giving me a reset for the year, I took advantage of this and just kind of moved it back into the S&P 500 and just kind of let it sit. And I'll eventually transfer it out of that account here in the upcoming future. Okay, I'm going to go ahead and refresh this page once again. Now, I posted over on my Facebook page earlier in the day. I think I kind of posted a couple things here, but this is the main thing here on Friday that I posted. So, happy last stock day of February. So, the 28th was the last day in the market that you could trade, and it was just kind of a positive day. Today, you were able to buy many stocks at a deeper discount, deeper price than 1 month ago. If you look back a month ago, the market was at an all-time high. Right now, you're able to go out there and look for positions in your portfolio that were not red in the past, that you're able to kind of dollar cost average down more. I know in my portfolio, I'm pretty excited. There's a bunch of positions that recently opened up that I have not been able to add more equity to for the past year. So, a couple stocks that increased their dividends for me here in February were Walmart. They increased it from 212 to 216. Small increase there of around 1.872%. Cisco increased it from 140 to $1.44, up and now 2.82% or roughly in the area. Genuine Parts went from 305 to 316. That's roughly a 3.54% increase. So I did get 3 stock increases here in February. And between January to February, my dividend income increased by $20.91. This is from getting dividends in the account that bought back more shares. It's from equity that I added into the Roth IRA. And the total dividend income for the M1 Finance Roth IRA only going forward is now $754. So I now have about 7 new positions in my portfolio that are red. A few of these includes Stanley Black & Decker, ticker symbol SWK, Johnson & Johnson, ticker symbol J&J, EV, Eaton Vance, McDonald's, ticker symbol MCD, Main Street Capital, ticker symbol MAIN, and Cisco Systems, ticker symbol SCCO. So I'm really excited about these positions. These are positions that have been positive in my portfolio for quite a while and just have recently dipped into the red for the first time in a year and a half, maybe even 2 years since starting this portfolio. So I'm excited to begin averaging into these positions once again. And again, I'm really excited to see Main Street Capital and Realty Income, ticker symbol O, drop by so much. If we look at these positions here, we'll see that in the week here, O went from trading $83.05 to now $72.39. That is a huge drop off. That is over 13% here, 13.6%. If we go back over a month and just look at the high here of 82.44, so we'll say 82.44, it is now 12.19% off, its high here. And if we go back, where was the last time that this was right at this point? Well, you would have to go back to right about here. August 13th, 2019. I've been wanting to get into Realty Income. I would really be more excited if it fell down into the 50s and 60s. I don't believe this will happen. If it does happen, it's a new position I would like to add into my portfolio. It's a monthly paying real estate investment trust or REIT. And the other one here I would really like to kind of continue to get into, is Main Street Capital. Looks in the after hours, it is moving higher, up 2.82%, but still, it should still be hopefully in the negative in my portfolio. Here it had some highs of almost $45 before now dropping over 17.93%. This actually put it into the red for my portfolio, and I'm really excited about that because I don't have that much in that. It's another monthly paying REIT, but I'm really excited to kind of see this one trend lower. So those are some of the, what's kind of going on, my kind of thought process there. I'll kind of go a little bit further into what I'm doing here in the future. But with that said, let's go ahead and jump into the account. So The taxable account here, this is just one ETF. This is ticker symbol VU. This one in the week went down 11.43%. So I'm actually going to bring up another profile here and show you another ETF that I track in another account. And so I kind of want to do a comparison between these because these are actually two ETFs that I've been wanting to. I created another account over at Fidelity. I'm not sure if I want to fund it or if I just want to fund my Amero Edge one or my Roth IRA here in this account and just kind of move funds into this. But what we want to kind of showcase here is this is ticker symbol VU. This went down 11.34%. It now has, in a week, it went from $606.39 to now $537.63. So it didn't make any dividends in the week, obviously, but in the month, we can see it's down 9.47%. Most of its loss here is right here towards the end. So that is a taxable account within my wife's account. Now, this is another account here. This is actually this is the growth one. Let's flip over to the IRA. This is a ETF here, and this is using SPLV. This is an Investigo S&P 500 low volatility fund. This one over the past month lost about 10.02. So we have 10.02 and 9.47. I'm actually really surprised that the other one fell by a little bit more because this one has about 20% real estate investment holdings, which initially was holding the portfolio up a little bit better. But as the week progressed on, I saw Realty Income and Main Street Capital and a few others began to get really hard and hit tumbled, and that actually caused this one to fall a little bit further. So this one's actually down on the week 11.82%, and for the week, that's the same thing, I think. Yeah. And this one on the week is... thought I keep selecting it. There we go. Okay. In the week, this one's down 11.34 for VU and 11.82 for SPLV. There was actually an article about this, about even the low volatility funds got hammered just as fast as the main index tracking funds. So it's kind of interesting. I don't hold a lot in this account. This is my own Brent account. This is just my IRA and my taxable account that I started over here quite a while ago. And it's just been kind of going. This account was started back on the 29th of 2019. I haven't funded this. This is the account that I started with my kid just to kind of show him that he's able to earn dividends just off his capital. I do have a couple other, let's see, where's it? The growth taxable account. There's not too much in here, just kind of testing some of the water shares. So these are some of the positions I just kind of tossed $10 into and just kind of let them go. They were up quite a bit more. Let's see, look at the 1 month performance. Down 6.72%. The 1 week performance down 11.72%. And these are taxable as of the 25th of July 2019. These were all purchased. I haven't purchased anything else. And I'll just kind of keep them for 366 days or longer. That way they just get taxed at long-term capital gains. So those are that account. So let's go ahead and move back over here. Let's look at the Roth IRA. This is the biggest one on M1 Finance as far as our accounts goes. Our other accounts are either on Merrill Edge, Fidelity, or Roth 401k, and a couple other accounts out there. But the Roth IRA here, it is still positive overall since January 8th, 2018 when we started investing. It's still up 8.22%. But what you'll notice here is that it is not from market gains. So had I recently started this account, I would probably be down by 8.22% if I started here recently. But because I have all that time since January 8th, 2018 with this equity working for me, it has earned dividends in my account of $895.63. And that's what's kind of keeping this portfolio positive here overall. If we look at the 1 month performance, this one lost a whopping 10.87%. So not as much as the S&P 500, but it's still a pretty good hit. I've lost over $2,200 here in the last month, and the majority of this here is just from the last week. We can see here 1 week performance down 10.96% and a little over $2,300 lost here in this week. We saw last week on Thursday and Friday. I don't know if I did my recap, but Thursday and Friday last week were negative. And I was expecting I think I said in the video, a 2 to 5% drop. I didn't say it directly, I said it indirectly towards the end of the video. I asked what my viewer subscribers were looking like the market may fall. I said 2 to 5%, kind of offhand. It actually fell a little bit faster and harder than even I expected. So I think it's pretty good. And I'll kind of go into why. So let's see how these positions kind of did this week. Over the 1 week, the best performance were Clorox, only down 3.16%, followed by Waze Group, down 4.09, 3M, down 4.9. Now, from that point on, everything else lost roughly 6 to 18% for Eaton Vance. Another one, Main Street Capital, we already saw 16.64% to the low. Low down 14.96. Avery Dennison, CVS Health Corporation. So these positions down here towards the bottom are actually some of the ones that I have just been waiting to average into. Why? Because Eaton Vance only has $168 into it. I want to get this position to $800 or $900. CVS, another position I need to add more equity. Main Street Capital just has $144. Again, I want to build this one up to $800 or $900. Like my bulky positions here are like in the $800, $900 of invested capital in them. So I definitely want to kind of get these working. So if we look at the overall positions, if we go into the holdings, we'll go ahead and show some of these positions, but the ones that I'm excited about obviously are going to be McDonald's. McDonald's, I've been wanting to average into this. When I bought it, it just began to move positive. It came down negative, down 2.45%. So I'm going to be able to dollar cost average into McDonald's. Main Street Capital down roughly 1.33% into the negative now. Eaton Vance down 3.52%. Lancaster, this is one I recently added, but we'll probably kind of hold off to build my other main positions up a little bit more. Let's see here. Johnson & Johnson. I probably won't add any more capital into that one right now unless I add it up to $900. Cisco Systems, I'll probably add a little bit more into this one as well. And let's see here. Chevron, Caterpillar, 3M. Those are already in the red. So I'm just pretty excited about these recent ones. They just kind of dipped into the red. It doesn't need to be very much, but just knowing that they weren't red in the past. So if we jump over into my spreadsheet here, I went ahead and I think I've already done everything. So I'm just going to lock the data, copy, and just paste the values. And this is just my live data. So the difference here between January 2020 and February. So at the very end of January, the capital in this portfolio, this is showing, I don't know if this is actually correct. It could be. I know there was a time where I stopped tracking my portfolios for a while. I didn't track and care about the market too much. It's going to do what it's going to do. I just bought my dips and just kind of let it trend. So at the very end of January, I had 12 positions that were negative. Now, very end of February, let's go ahead and take a look at these positions that are negative, and we will see that we went from 12 positions negative to now 18. So that's 6 new positions that are now negative. Here, some of my recent ones that I really want to average into is Main Street Capital. It is offering a current yield of 6.66%. I had a starting yield of 6.57%. It's an every month paying dividend company, and it's been growing and paying out dividends for the past 8 years. I believe now here in 2020, it should have about 9 years under its belt. So that's one I kind of want to buy and average into. They pay roughly $2.46 per share each year. So this is one I want to add into. Johnson & Johnson, dip back into the red here. Let's see here. I don't know which way is going to be easier to kind of showcase these, how they were. But I know 3M, AbbVie were negative, Altria was negative, Caterpillar, Chevron was negative. Johnson & Johnson. So Johnson & Johnson was up by 8.41% at the very end of January. If we look at Johnson & Johnson now, here it is now down 1.75%. So I do want to add a little bit more into Johnson & Johnson. It's such a strong company. It just continues to grow and pay out dividends. I think it's at 57 years of dividend growth. I have to update this line. I think everything is still set for 2019. Everything, if as long as it doesn't cut its dividend, it should just have one additional integer added to it here for this year. So I know Johnson & Johnson is now dipping into the red here in February. Also here, we can see all these positions were green, but I noticed Las Vegas Sands. Is that Las Vegas? No, Lancaster. Okay, that one's fine. We can just see quite a bit of positions here. Main Street Capital now in the red. McDonald's now in the red. And these are just positions that I want to build up to be more than where they are currently at. I'm probably going to be focusing quite a bit here in the upcoming weeks on Main Street Capital, McDonald's, Lowe's as well. Lowe's is another one. And I'll have to just kind of look a little bit further into these, but I'm just kind of excited about this. So, what am I doing right now as far as, capital wise? Am I planning on selling any positions? First of all, I'm not planning on selling anything. I actually think it's pretty exciting to see what we've kind of done for the past few months. If we go back until August, there wasn't a whole lot of opportunities out there for just buying into certain positions. Main Street Capital, I think, has been positive for a long time. We can see it was up 16.4%. If we go back to January 2019, Main Street Capital, where was it here? Maybe it wasn't even in my portfolio yet. It doesn't look like it was added in my portfolio. I think I started adding it around February, or so, yeah, right there. I started buying Main Street Capital. It started going positive after my initial buy. And I don't know if I got to buy a little bit more of it. It dipped into the red there, so I think I bought probably a little bit more, possibly. Main Street Capital, yeah, I bought a little bit more. And it was just early in 2019, it just started to take off so fast that I just never got it to a sizable position where I wanted it. So here in 2020, in March now, I have that opportunity. So as far as capital goes, what I've done here is I haven't funded my own Roth IRA. I did fund a portion of my IRA, so I still have a piece that I can contribute towards 2019 inside of a Roth IRA. I'm going to be ending up just kind of funding it and kind of choosing positions to either move it into. I think in my own portfolios, I'm going to choose like an ETF. I'll probably either pick up VU or SPLV. And in my wife's account, I'm also planning on funding it as well. I think I would really like to kind of just build these positions up really quickly into the ones that are in the red and then just kind of set it and forget it. I just kind of fund the accounts and have the capital available. So I've already kind of started moving some of the funds out of Wealthfront, moving it over into my checking account. That way I can kind of move it into here. It does take a little bit of a process. So I'm hoping by next Friday I will have all those funds hitting my checking account and then moving them into M1 Finance in order to begin doing some buying. I do want to, my end goal is to transfer everything off of M1 Finance over to Fidelity. That way I can buy during the day dips. Like if I see buying opportunities, because Fidelity does offer fractional shares, it does have an app that allows you to buy those fractional shares. I do kind of want to be able to just buy with limit buys when I want to buy versus having the capital in the account and then being able to only buy in the mornings. And it's very random. You could be buying, it's market buy. So you could be buying at where you want it to be buying, or you could be completely off by a couple of dollars or, $10, $20 sometimes, just depending on the speed of the market. So I am planning on adding more capital into all of my accounts. I had a really hard time the last week kind of thinking about it. I want to keep capital on hand for my real estate business to just be able to buy properties, but at the same time, moving and maxing out the Roth IRAs isn't going to change what I'm able to buy as far as real estate goes, because I can only contribute $6,000 inside of my Roth IRA. I can only contribute $6,000 into my wife's Roth IRA. That's only $12,000. That leaves me for the rest of 2020 to just kind of recoup that $12,000 elsewhere, and then I still have capital on hand for my real estate business. So it took me a while, but you only have so much time that you're able to invest, and you can only contribute up to so much per year. You can only contribute $6,000 per year. So the way I look at it is that back on January 1st of 2020, when you couldn't contribute towards 2019. You couldn't put $6,000 and contribute it towards 2019 up for 2020 up until the 1st of January. So it wasn't until the 1st of January when you really just had that opportunity. And right now, we are getting a 8.56% dip to where the market was trading just 3 months ago now. So I think I will use this opportunity. I've been wanting to do also an experiment. If I just dump all my capital into a ETF on my own Roth IRA and then dollar cost average into my wife's Roth IRA, I would like to kind of see the performance here. It gives me a better step in the market now because it's down 10% off those highs. Almost 10% off those highs here as far as year to date. But I don't know. We'll see. I am planning on adding capital, so that was the main thing there. Let me know in the comment section below, what are you doing with your investments? I know a lot of investors and other portfolios. I know a couple comments or also mention it down in the bottom below. As far as real estate investors go, they were undecided as well whether they want to take advantage of what's going on right now in the market, putting money in their Roth IRA and getting it to work. And I had that same thing. In 2019, I was making offers out there on properties, but they were not getting accepted, or I was getting overbid. Somebody else was offering more than what I was offering, and they would not accept my offer. So I may have offered anywhere from 20 to 40 times in 2019, but I landed a single deal. So all the capital that I had sitting in my Wealthfront account, my SoFi accounts, links down in the description below, it sat there and just earned interest that is taxed at my regular income tax bracket. So where I may have made a couple $1,000s if it's off interest, that's going to be taxed at my tax bracket, and I don't want to have that done this year. So another thing I was thinking of was just kind of moving all of my equity from Wealthfront over into a taxable account and then invest in tax-free bonds, municipal. I can't think of the word. The bonds, either BND or find some other corporate bonds and just use the equity in order to make a yield on it. But I don't want it to fluctuate so much that my X amount of dollars would move by 5, 10, 15%, because I do want to use that capital for my real estate investment. So I know it was a lot of jibber jabber here towards the end of the video, but that was just kind of my thought process, not having really put it, pen and paper. So that is going to be it for today's video. That, I know we didn't cover the dividends either, so we'll cover that as well really quickly. Just only dividends for the month here of February. Okay. So as far as all the dividends go, we did make a good chunk. I don't know if it's the largest single month payout. Normally, I don't think February is a big month as far as dividends get paid out, but we did had a number of positions get paid out. The smaller number here, I'll just show you a little screenshot of the paid dividends that were received, anywhere from ABM all the way down to Caterpillar, were $59.08. So our biggest dividend payouts were ticker symbol SKT, which is Tanger Factory Outlet, ticker symbol here. It is down 28%, roughly $198. It does have a starting dividend yield of 11.94%. I have an 8.98% yield. So I don't plan on actually adding any more equity to it at this time. I think there's other positions out there that are just not as risky. I think Tanger Factory Outlet's a little bit risky, but it's only $800 in that position. And between those two, that was a good sizable chunk there of $17.84. The other largest chunks were AT&T, $10.72, and Avi paying out $10.84. I think from my other accounts as well, Avi paid out roughly $64, I think, in the other account. So overall, it was a good dividend paying month, anywhere from $120, $150 paid out just in dividends this month. And that was all reinvested back into the market. That's why this account went from $754.67 of annual income to now $775.58 of dividend income. And of course, as we add more capital into this position, as we begin to buy Main Street Capital, McDonald's, Lowe's, and other positions, this annual income is going to be increasing rapidly as we just throw more capital into this portfolio. So that is going to be it for today's video. If you guys have enjoyed this video, found it entertaining or just, interesting, give me a thumbs up button. Hit the thumbs up button below. If you have not yet subscribed to this channel, definitely hit that subscribe. And if you have any comments or questions going over this video, the stock market dividends, or just want to let me know what is going on with your portfolio, let me know as far as if you've made any positive changes, if you are buying, if you're selling, if you are excited for this market correction. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.